What happens when your searches don't yield any results and you can't find anything to invest in? That's what we'll be talking about this week on our Special Situations Investing with Greg Miller. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. There's a couple of things I like to do when I invest and I have a week or two or maybe even a month where I just can't find anything to put my money into. And I'd like to go over some of those things today because, well, this is one of those weeks for me. I looked at all of my normal searches. I did find a couple of things that were interesting, but not necessarily anything that was mind-blowing. Oh, I've got to put money into it. Perspecta had an offer to finish up their purchase this week that came through my searches. And if you're not familiar with Perspecta, it's a spin-off that occurred about 2 years ago from DXC Technologies, part of the Hewlett-Packard reorganization that happened over the past couple of years. Well, anyway, with that, it just wasn't enough to warrant me sharing anything more than just, by the way, it happened this week. And so this week, I'm spending a little bit of time just talking about the things that I do when I can't find an investment to put my money in, or in the inverse case, I don't have any money to put into it. So there's a couple of things. First, I need to maintain a mindset of being diligent in my patience and rationality. So there's a lot of things that happen if you make mistakes with investing. It usually comes from being irrational or not being patient with what you're doing. And I get this from studying some of Charlie Munger's writings and some of his quotes. And he says, we need to keep raw, irrational emotion under control. You need to have patience and an ability to take losses in adversity without going crazy. You need an ability to not be driven crazy by extreme success. And I think it's really interesting. You have Charlie Munger here, a great investor. He was very successful and still is successful to this day. And he's saying that the things that people need to focus on is be disciplined and patient. And then the ability to deal with the adversity of losses, and, which blows my mind, and the ability to deal with success. So let's get into a little example of success that happened recently. So you probably are aware of the Gamestop short squeeze that has happened, and you think about Roaring Kitty or Keith Gill. He ended up testifying to Congress this week because of his experience investing in the Gamestop company. And that is a crazy thing that he's finding himself. He went from, some estimates put it at like $50,000 invested into the company that turned into 40 million or more. And that's a huge thing. And to have the willpower to not sell, which, if you got into that type of situation, I don't know. Personally, I might be very rational and I just say, you know what, I'm going to cut my gains to a certain extent, and I'm going to take some of this and I'm going to pay off my debts and live at least somewhat of a life of leisure. But he had some significant conviction with what he was doing, and it's really interesting to watch some of the stuff that he has. If you want to, you can go ahead and check out Roaring Kitty on YouTube and see some of the things that he has. It's long, but he puts out some pretty interesting things about GameStop, and it was definitely worth the time to go and look at what he's done. However, looking at this, now because of his success, people get jealous, and one of the first things that happens when people get jealous is they try to cut you down. And I can imagine that is one of the things that he's probably dealing with some of the court cases that are out there right now, and unfortunately, people are very jealous with the way that they respond to that. Incidentally, that did cause me a little bit of concern, because I don't know if I want to one day, because of something that I've done on this channel, testify in front of Congress for some of the things that I have done or how I've conducted myself. So it's interesting to think about. It's a mixed bag whether or not I would be happy that I'm in that position or not. Who knows? But Keith, hopefully, if you ever watch this, I really appreciate your interest, and we're hoping that everything turns just fine for you. The other thing I like to do when I am not finding anything in my normal searches for investments is I like to read or reread about some people that are successful in their investing practice. So this last week, I spent some time rereading some of the books that I have, and I think it's important for you guys to take a look at this. So I reread the chapter on tender offers in The Special Situations by Murray Schiller. So the Special Situations, the Investor's Guide to Special Situations in the stock market. This book is really good to help you think, not necessarily find the specific tactics and procedures that you would do. But the chapter 12, that's the one where I got the ideas on how to find tender offers. And those of you that have followed this channel for the last 6 months, a lot of the stuff that I have done in tender offers has all come from my adaptation of his ideas. And I think that this is pretty important, and if you are trying to learn new things on a regular basis, sometimes the new things are from people that have already passed away or are getting kind of older in age. So pretty valuable knowledge on this. If you like to see, learn about obscure people, you want to learn more about obscure people that may never be famous even throughout all of history, Murray Schiller is one of them, and you can subscribe and you can learn about me because I'll probably never be famous, and then you can go ahead and you can be a part of the lack of fame in this area. So another one that a lot of not necessarily the common public spends their time reading is The Intelligent Investor by Benjamin Graham. So this is my copy. It's pretty beat up. I've reread it a couple of times, and well, I should say I've reread the whole thing a couple of times. I've reread some of the chapters, and in this case, chapter 8 and chapter 20, those two are the ones that I read quite a bit. And I do that because my copy has a foreword by Warren Buffett. It's the 5th edition, and it has this foreword that says, Warren Buffett, he says, any investor should spend their time reading chapters 8 and chapter 20 if they want to be serious about doing this. And those two chapters talk a little bit about the Mr. Market hypothesis, the idea that the market will go out there, just like you're having, Warren Buffett's idea of, you have a farm and you buy a farm today and it's, $10,000, and then tomorrow the market will come to you and say, we'll pay you $2,000. Well, the value of the farm has not gone down to $2,000. It's that the market has gotten a little bit irrational with the way that they approach things, and so now they're only willing to pay you $2,000. And then you go the other way, it's the market value. They say to you the day after it's worth $100,000, and again, where is it really worth that? And there's other ways to describe it. Joel Greenblatt has a great story when he goes in to talk to young kids in a school. He has them guess the number of pieces of candy in a jar, and sometimes you have the high end, sometimes you have the low end, but on an average of the class, they actually had a pretty good idea of how much the company was, or how many pieces of candy were in this jar. And he uses that as a metaphor into, how are you preparing yourself to identify what the true value of a company is. And that puts me to my next thing that I did this last week. I looked at some investments that I know have performed well for people over the years, and I look at the company and try to understand why that company was such a good investment. So I spent some time digging into just looking at Moody's Corp, and full disclosure here, I'm not an investor in Moody's Corp, ticker symbol MCO, but I know that Warren Buffett invested in this company years back, and he's done quite well with that one. And sometimes just looking at a company like that has been successful for a previous investor, to just identify what is it that they might have looked at. And the thing that stood out to me when I reanalyzed Moody's is, for the past decade, that company has created operating margins 40% and above every single year. And that comes off of just the Value Line survey that I like to read about the company. And it was quite fascinating to see that. And the share price has rewarded the shareholders accordingly. And, it's interesting to see companies like that are out there that, it's kind of a slow grower. If you think about Peter Lynch, by the way, that's another one that I've spent some time rereading some of his work. It's Peter Lynch's One Up on Wall Street. But he talks about the slow growers or the compounders, and Moody's Corporation is definitely one of those that allows long-term growth of capital and a really good long-term perspective for interested investors. Again, full disclosure, I'm not an investor in Moody's Corporation. And I don't know, per my analysis, I don't know if now would be the time that I would particularly want to buy into the company. In summary, the things that I like to do is to cultivate that rationality and that patience in my own investing practice. The second thing that I like to do is I like to reread some of the great investors that have gone before me and reground myself to that concept of what will keep me successful. And then finally, honing those skills that I need to do fundamental analysis on specific investments that I might be interested in. Hey guys, if you like this kind of video, please smash that like button. Again, if you want to see more from a very obscure investor out there that is still learning how to do special situations investing, go ahead and you can click the subscribe button. I continue to do weekly videos on Mondays, and if that ever changes, I'll let you know, but Mondays is my current schedule, and I just like doing this, and I appreciate all of your support, and we'll catch you next week. Thanks so much, guys.